Morning guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be talking about a trade idea that I'm monitoring at the moment. It is related to Bitcoin, the number one largest cryptocurrency in the world, and it's a macro play, so it's not really based on crypto fundamentals per se. It's more a way of sort of trading in line with the downside that we're also seeing in stocks. But anyway, let me talk it through. You can see I've got Bitcoin here, 1 day candlesticks. It's back below that 20k level. It's been a rough, sort of choppy couple of weeks for Bitcoin. It's pulled back from after nearly testing this resistance area around 25k or 25,500. It's pulled back quite a lot in tandem pretty much with this downside we've seen in US equity markets, which I'll just quickly show you. Look at this. We've had this bearish pennant breakout in the S&P 500, and we're once again targeting annual lows. Well, Bitcoin very much the same, targeting annual lows, and I do suspect that it is likely that we will test the low that we set on the 18th of June at 17. Well, what is the low actually? 17,592 spot 78, according to this particular chart. Why are we seeing this move lower? Well, in the last couple of weeks, we've had markets building up their Fed tightening bets. We've had inflation coming in hotter than expected. That was on September the 13th, hence that big drop. In fact, I can actually show you a chart. Now, this chart is pretty much what money markets, US money markets, are pricing for their essentially expectations as to where the benchmark interest rate is going to be at various points in the future. So the top one is where markets expect the Fed's interest rate to be in December this year, then in March 2023, then in June 2023, then in December. Now, you can see that it's been steadily rising in the last couple of weeks. We're pricing an interest rate of just over 4% by the end of this year. That's been steady in the last couple of days. We're pricing an interest rate around 4.5% by next March. That's been gradually rising in the last couple of days. Same with June. That's gradually risen in the last couple of days, above 4.6. But interestingly, we've seen a jump since yesterday in where markets are pricing interest rates for next December. Now, we had the Fed last night, and as expected, very, very hawkish, okay? In wake of recent inflation data with the core CPI being hotter than expected, in wake of the labour market, which continues to outperform expectations, growth, which continues to look fairly decent, despite, high inflation hitting consumers very, very hard. The Fed's dot plot was more hawkish than this curve, than this Fed expectation curve, and basically what markets were expecting, which is why, and particularly the Fed's dot plot seemed to push back against the idea of rate cuts next year, which is why we've seen particularly this December and the Fed funds futures implied yields for the latter half of next year. That's why we've seen them jumping. Okay, but the net impact of this building of hawkish Fed bets, which you can see in these charts here, is that yields are back on the front foot, and it just creates a pretty toxic environment for the likes of Bitcoin and the likes of stocks, which like easier financial conditions, and they don't like tighter financial conditions. Now, the trade that I'm thinking is, I think that there could potentially be a break below this annual low, and then because it's Bitcoin, it's volatile, a fairly rapid push to the next significant area of support, which is, you have to go on a monthly chart and you have to go all the way back to June 2019, and it is the high from June 2019 at 13,880. So I'm basically looking for this downtrend to continue as it has over the last couple of weeks, and then eventually for us to get down here. Now, this depends a lot on the fundamentals and how they kind of shape up over the next couple of weeks. Let's go through some of the key events, in fact. So this month, we've had the Fed the big stuff's mostly over. Like we've got these flash PMIs coming out next week. Tomorrow on Friday. Um, Timely update as to the state of growth in various sectors of the US economy, like the service sector and the manufacturing sector, which could impact sentiment because if that comes in weak, then it's like a worst case scenario because you've got the Fed that's increasingly hawkish, but then you've also got growth which is increasingly suffering, which further dampens the likelihood of that US soft landing, which everybody is craving for. Essentially, the soft landing being the Fed managing to get inflation under control without causing a recession. Next week, Fed speak's going to be important, of course. After we've just had the Fed this week, see what all the different policymakers are thinking. Consumer confidence, we know that's going to remain depressed because of inflation. The one I'm looking at, though, core PCE price index, because we had that very spicy core. In fact, I can show you. Core CPI, boom, earlier this month, September the 13th, 0.6% month on month. Wow, well above expected 0.3. But the one the Fed really watches is this core PCE price index. So, you know, imagine if that surprises to the downside. It could suggest that there's maybe something up with this data, um, which could cause a little bit of a rebuilding of optimism, or the other way around. It could reinforce the fact that core inflation is too hot and reinforce Fed tightening bets, which could be a toxic environment, which could facilitate further downside in the likes of Bitcoin. And then the week after that, the first week of October, it's always a big week. The first for data, the first week of the month, we've got the ISMs, PMIs coming out, which are the more followed ones, which are seen as giving a more sort of accurate update on the state of growth in the US economy. JOLTS as well. How many job openings are there in the US economy? A lot. According to, at the end of, when was it? The end of August. Um, and obviously jobs data as well. Which should, just like the jolts, just like other reports, should reinforce that the US jobs market remains strong. Then more inflation data the following week, Fed minutes, which should be hawkish, retail sales, all of these data prints sort of just updating on that macro picture. Around this week as well, mid-October, you actually get the start of the US earnings season too, which will be very important for stocks and therefore important for Bitcoin too. And we've had some pretty ugly updates recently from the likes of FedEx and a couple of other people like Ford. And if this earnings season is bad, then again that could facilitate this drop that I'm talking about in Bitcoin. But anyway, that's what I'm thinking at the moment, guys. This is going to be a long-term play, and I'm going to update you on my thinking in my weekly videos where we talk about all this kind of stuff. But that is the idea that I'm having at the moment. Hope you all enjoyed the video, and I'll see you all in the next one.